Hey, good morning, everybody. Bob Trade Genius, the 20th of June. And I wanted to do this report for you guys because I think we're about ready to start phase two. And I'm not talking about the virus. So I look at it, a couple different things that tell us that maybe stress is building back up into the system. And I just want to show you, some charts here. So the yen is used as they sell the yen to basically create cash, and it's a funding mechanism so they can speculate. When the speculators get scared or they get forced to pull back, it strengthens the yen. So we had this massive push higher in the yen when we had our February collapse. They brought it back down, came back kind of into like a stasis area here, and now if you notice, they started to push it back up higher again. So this has caught my attention. It's right at the 50% of the retrace here of this move, and if it busts over this, then you can assume that people are pulling off their yen pair trades. So just note that. The next thing I'm going to show you is on the VIX. So let me go to okay. The VIX is the same way. They like to push the VIX down because of the algos like to create an environment where if it seems safer, you can take on more risks. So the risk parity traders are trading and are more aggressive. But also, if you notice here too, this past 2 weeks popping up too. You have to ask yourself why. Well, the Fed is starting to take their foot off the gas a little bit on the fundings that they've been doing, and it doesn't matter if they keep funding it. It's really a matter of the intensity or the acceleration. As the acceleration's coming off, starting to put some stress in the system here. And if you notice, now we pushed up. We had OPEX week here, which tends to be a little bit on the positive side, although Friday was a little bit of got a little nasty here, and I'll show that to you here into the close. And at the end of June, we're going into a stock rebalancing with bonds. So everything's pointing to a next couple weeks to be a bit rough. Okay, so this is there too. And so you have to look for this. It's holding this fib line here, and look for it to push higher as well. So that's the VIX. And then if we go over to look at XME, right? Because we're supposed to be coming out of the doldrums here. We're opening back up. Blah blah blah. So here's the high that matters on this fib here. And then we come down to here, this low is getting stalled right at the basically a 61% retracement. And got stoned right here. Okay, even though this week was positive, commodity stocks have been selling off. So this is another warning flag here too. Broke below the 50. Okay, my ribbon is saying it's a sell mode, and so there's just something to keep an eye on here as well. So okay, let's look at one more. And here's GDX. Okay, GDX looks relatively well, right? So here's its low, here's its high. It's consolidating on the high right now. And so one of two things are going to happen. Either people are going to run to the safety of precious metals on this move down, or like in February, it's going to get obliterated too. Hard to know yet, but I'm watching this level here. If this level breaks down, we're putting in kind of a head and shoulders pattern here to bring us down to here. So just keep an eye on GDX and gold. And I'll pull a chart up and we'll trace gold out too to take a peek at it together here in a second. Okay, and then so I'm long SH, I'm long VXX. I closed all my long positions that I'm doing short-term speculation on. Had a great week, but it's time to be careful. And then here's SH. Okay, a little bit more of a micro look here, but SH is coming up also off this move here, It pushed up. It's got stoned on the 50% retrace. Okay, which is saying the market was still bullish, but it's coming back up again on this 23. And my ribbon, this fast ribbon here, and I'll go to a tighter time frame here. If it breaks back over, excuse me, this 2241 area next week, then I'm looking forward to get up over here over 23, and then basically it's going to move higher as the stock market moves lower. So I'm getting confirmation everywhere, and I'm also long VXX too. Same reason. Okay, this is not showing the after hours, so it looks pretty normal here, 36.97. Okay, here, check out the after hours, 38.15. Okay, and it's pretty much where my buy price is, and we laddered in on this. And if I go back to SH and look at the after hours too, pushed up to 22.56. So the end of the day, once the market closed, the futures market extended hours just continued to sell off. And I'll show you that one too here. So let me go, oh, it's over here. Okay, this was nasty. We trade the futures a lot, and we were watching this pivot at 39.15 on a shorter time frame, and it just rolled over, cut some of that move down, and closed off. And it just, after the market closed, regular trading hours closed, it fell another 25 points, and that means that futures traders, they bailed out. So I expect Sunday to be pretty interesting open. So just to bear that in mind. Also, we had, here's oil. Oil was going bonkers too, and I'll go out to an hourly. They've been driving oil up higher. It hit 40.50, and then as soon as some news came out, look how fast. There's no real bid in this market. There's all speculators. Any bad news is just going to just dump these things. Oil is extremely overvalued in terms of the production and consumption levels. This is purely a speculation move when it came up off of zero here. You remember this? Let me zoom this in a little bit better. This. Oh, by the way, this is what happens when derivatives go wild. Okay, we had minus $42 on oil. It's just ridiculous. It's going to screw up my chart, so I'm going to go back to here. So on the daily, look at this. I mean, this is what happens when you get excess speculation in the system. Okay, nobody wanted to buy oil, and so they just crushed it. And by the way, they allow negative prices now on the market. So be extremely careful if you're trading these things without adequate protection, because you're going to get your head handed to you. Okay. And then here's a little note I wrote to myself. This is a good truism for you guys. It's not going to let me fin this out here a little bit. Here we go. Okay, I always write a note to myself. Don't ever short oil going into Friday. Okay. And because people don't like to be short oil going into the weekend, because you just never know when a war will break out. And it was true again today. I mean, look at this thing. I mean, Friday, so it just drove right up. But we hit a high here. I'm expecting next 2 weeks oils to start selling off. We're going to be coming out of the driving season. Lockdowns are still, in effect. People are very cautious right now. I don't think these prices are going to hold. So, and then the last thing I'll show you, let's take a look at gold together here. We'll draw some fibs. Okay, so gold had a nice day. Wasn't sure how it was going to play out, but people are bidding gold here. So might be, the miners may break to the upside. I'm just cautious because my biggest loss this year was I moved to miners when the market was selling off, and then the miners got crushed. So it's going to have to kind of prove itself to me a little bit. I'm going to be a little bit more careful. But we have a situation here where we broke out of a range. So you draw a fib here and you draw a fib here, and this is called higher high fib, and it went ahead and it hit the extension here on that. So this may pull to the highs of gold right now. Wait and see. The other thing I look at is on my ribbon system is that, you know, when you get a move like this is a slower time frame. You get this fractal here that comes in. You never short this first fractal, okay, because it tends to do just what it did here. But the second one almost always is that either it's going to consolidate or it's going to fall. And so when I'm looking at gold right now is if I draw the fib line here from here to here, is that I'm going to be watching. So far it held this level here. If it doesn't hold this level, I look to here, then look to here. If it fails here, then there's a good chance we're going to be we hit a high. So right now what you're going to see is you'll see buyers come in here, and if that fails, you'll see buyers coming in here, and if that fails, on and on. Okay, so sometimes these turns into slope of hopes where people get hit and they keep going down. So a lot of the algos like to look at the 50% area, and they definitely look at this area here. So that's the areas you want to watch now. And when it pushes up like this and comes back in, you know, this might have been the move for a while. So we shall see. But that's the only area that I see of any interest at all. If everybody gets freaked out, is that will they run to the metals, precious metals? They're not running to the industrial commodities, so we know that's not going to work. And volatility goes up. The guy who made $1 billion in the February collapse has started buying volatility again. So now he's not all seeing. He's usually right about 1 out of every 3 times, but he makes so much money when he's right that he's willing to make the bets. But the fact that he's making a bet, meaning that his algorithm, his mathematics are telling him that our higher volatility levels are have reached their low for this cycle. So anyway, hey, come check us out. You know, we got great specials running if you want to trade with us. TradeLikeAGenius.com, and we trade futures, we trade crypto, we trade the stock market. We have this ribbon system that is excellent, and it'll put you in a position to make some really good trades. And it's a system that just puts the odds in your favor. And love to have you join us. TradeLikeAGenius.com. Check us out. Specials running till tonight. Bye-bye.